Do you have to pay back property taxes on a foreclosure? Welcome back. I'm Ted Thomas, and I've been involved in the tax lien and tax deed business for over 25 years. And you're going to find this very interesting because people confuse property taxes, regular taxes, foreclosures, tax auctions. I'll try to clean some of that up for you so you understand it. Now, in this episode, I'll cover, do you have to pay back property taxes on a foreclosure? So I'll answer that question for you here in just a minute. I'll give you some more information about tax lien certificates and tax deeds. I'll also explain the foreclosure process to you. But when I finish in the last minute or so, I'll tell you about big mistakes that are made at the tax auction that you want to avoid. So don't miss that, and I'll be right back. Do you have to pay back property taxes on a foreclosure? Well, tax liens and tax deeds have been around for 200 years. In 3,000 different counties, half of the counties will sell tax lien certificates. The other half will sell tax defaulted properties. Same thing with the 1,400 municipalities. So there's going to be plenty of everything. Now, thousands of people default on taxes each year, and multiple thousands of people, they default on their mortgages. Now, this creates a whole controversy, and people are totally confused, and they really don't know which is first and which is second. So I'll tell you right up front that you need to be thinking about a tax auction as being the first priority lien. And I'll get into this more in detail. Now, the average person doesn't give any thought to the fact that the county has bills to pay. So property taxes were invented so that the property owners could pay the county's bills. Now, what do I mean county bills? Well, the police department, and fire department, the schools, the school teachers, you're kind of getting the idea. Fixing the roads, making the roads, all those things are county bills. Now, where are they going to get the money to do that? They get that from property taxes. So the very first tax on any property, the day it becomes a subdivision, is the day they make a tax number. And that's the very first tax. That tax will always be there for the life of the property. Doesn't matter whether it's 1621 or it's 2021. It doesn't matter. That property tax number will be on that property. It was given to the property when they made the first subdivision or said that they were going to have property and it was going to be taxable. Now, the state legislature makes the rules. Now, who do they make the rules for? For everybody in the state, including the county. So the state legislature tells the county treasurer, number one, you have to levy taxes. Number two, you have to collect the taxes. Number three, if you can't collect the taxes, you must confiscate the property. In other words, seize the property and sell it to pay the back taxes. All of the rules everybody's following. Now, the first rule always is that the tax certificate is the number one, the priority lien on the property. So we all live in this republic, and that means we can all buy property, we can resell property, we can subdivide the property, we can farm the property, we can do all kinds of things. The question is, do you have to pay back taxes on foreclosure? So let me get through that and make sure you understand. So let's start out with the basics. We all live in a republic. A republic allows us ownership of property. So that's quite a privilege. Now, we can do a lot if we own property. We could subdivide it, we could farm it, we could make it more valuable by building on it. All of that property is always going to be taxable. So that simply means everyone that has a property is required to pay taxes. If you don't pay taxes, they are going to take the property back. So they have a treasurer in the county, and the treasurer will levy a tax. You need to pay it. Treasurer will finally seize the property if you don't pay it, and then what they'll do is sell it, and they'll pay that. All right, so that first tax was on the property, and it's always there. Usually what happens after someone buys a property, they decide they want to head over to the bank, borrow some money to build a nice house, or they want to have a ranch or their farm, or they want to raise crops on it, so they borrow money from the bank. That would be a second loan, that would be a junior lien to the tax lien. So the tax lien is the senior lien. All right, so the question that we're answering today is, do I have to pay back property taxes on a foreclosure? Most foreclosures are on mortgages of unpaid mortgages. So a mortgage has covenants. What do I mean covenants? A mortgage has promises. A mortgage is nothing more than a promissory note that says, You'll pay the installments, you'll pay the taxes, and you'll pay your insurance. That's all a mortgage is. It's a very simple document, except the attorneys make it about 30 pages thick. All right, but it says in there that you'll pay all those things. But there was a lien before any mortgage came, and that was the tax lien. So if you don't pay your mortgage, the bank will be given an opportunity to pay for you. The bank will be given the opportunity. If they don't pay it, then the tax collector will have a tax defaulted auction, and they will clean the mortgage off the property. Does that mean that the mortgage doesn't have to be paid? No. Whoever had the mortgage, signed on the mortgage, that means they have to pay it. However, when it came to the property, the bank is saying, wait a minute, we don't want to lose our position on this property, so the bank will pay it. The point is, the taxes always get paid. So let's go back and review. The first lien on every property is always the tax lien. Okay, that's on the subdivision the day they made it a subdivision. It doesn't go away. It'll always be there. So you need to think about this. Will the mortgage be foreclosed? Will it have to be paid? Yes, the mortgage will have to be paid. If the mortgage isn't paid and the taxes aren't paid, they will take the property and they will sell it, and that's how they'll collect their money. So the tax collector and the treasurer will be working together. They will come and seize the property. When they seize the property, they'll wipe out the mortgage, and then they will sell the property, and when they sell it, they will collect the back taxes, so the taxes always will be paid. Now, can they come back after you to get that money? Yes, of course they can. So the question is, do you have to pay back property taxes on a foreclosure? Well, you might not do it because you might skip out of town, but I can tell you right now, those taxes will be paid, and they will be paid on that property because the government will sell it and get their money back. So the taxes are always paid. No way you're going to walk away from property taxes, and no property gets to walk away from that. So with that, I'll leave it open and we'll do a couple of questions. Okay, the question is, why a tax defaulted property a better deal than a foreclosure? Well, here's the deal. When a bank forecloses on a property and you want to buy it, you have to pay them whatever the foreclosure amount is. So they foreclose on a loan. So if the loan is $50,000, your first bid has to be $50,000. At a tax auction, you're buying, the first bid is going to be the back taxes. Now, the back tax is going to be 1 or 2%, whereas a loan could be 50%, 75, even 80 or 90%. So if you want to buy a foreclosure, that's on a mortgage. If you want to buy at a tax defaulted auction, you're paying back taxes. There's a world of difference. Back taxes could be 10 or 20% of the value. Mortgage could be 90% of the value. Do you want to pay 90% for a property, or do you want to pay 20% for a property? The question is, can you buy before or after an auction? If you're going to a foreclosure auction, you might be able to do something with the bank. If you're going to a tax auction, it has to be open to the public and everybody gets a chance to bid. If you buy it before, it's not going to happen. They're not going to sell it before. Why would they give you preference? All properties go to the tax auction. If you want to buy the property before that, you'll have to go make a deal with the owner. And when you finish making the deal with the owner, then you'll have to pay the taxes. All they care about is the taxes being paid. Okay, so let me go on to the last two things I promised, and that was there's two big problems that happened at auctions that I want you to learn to avoid, and they're very simple, but people make this mistake all the time. It doesn't matter whether they're brand new investors or they're old pros. They just don't think about it. They get all excited at the auction to make great deals, and I completely understand it. And here's mistake number one. They bid on properties that they haven't seen. You will go to the auction, you'll have someone in the row where you're waiting and doing your bidding that will say when they get a property, okay, Gladys, let's go look and see what we bought. Well, that's the worst thing that they could do, because what if there was a hurricane the day before? What if the property burned? What if there was a windstorm? I don't know what could have happened, but if something happened to the property and it's been destroyed, they already invested their money. I don't know that there's any rule that says the government has to give you back any money. Now, we have people buy without going themselves, and they go and have someone look at the property and photograph it. You need to make sure you know what you're buying. A lot of people don't, and they lose their assets, that's for sure. All right, now the other big mistake is a similar one, and this is they're excited at the auction, so they want to get a property, and then they start bidding on properties that they haven't planned an exit strategy. If you don't know your exit strategy, you don't want to buy anything. You want to know your exit strategy before you make the bid. The successful people know what they're going to sell for before they buy, or they don't buy. So those are two big mistakes that people make. Now, if you've learned a lot, I'm looking forward to you becoming part of the community. If you'd like to do that, you can register below me. And if you do that, I'll give you a free gift. It's called a Safe Haven. And the Safe Haven is a home study system, which you can watch and learn about tax defaulted property. You can learn about tax liens and a whole bunch of other information. It's all free, and all you have to do is register below me.